Hello friends, welcome back to the liquidity narrative. In today's video, just as we promised, we want to show exactly how to use internal range liquidity in real trading. As we promised to make the video, most traders they learn about liquidity, but they still enter too early or too late and being stopped out. So that's the reason for this. The reason they don't know how to use internal range liquidity in real time. So in this video, I'm going to show you exactly how to identify internal liquidity, use them to time entries, and stop getting caught in the fake moves. We've already done the first video on how everything about internal range liquidity. You can look out for the video and watch it. This is a continuation of it. So now starting back, we are using British Pound JPY as our example. We could have used any pair, but in those we have a dealing range which we always map out. This is the highs, this is the low, which we already explained. So we won't be going through it again. So as the range has been defined, we want to buy at a discount level within this daily range. We want to sell at the premium zone within this range. So the market dropped into a discount level here, so showing us a reason to buy the market. We are dropping down into our lower time frame to start looking at where internal range liquidities are. All these things are internal range liquidities. All these lows, we know we've already defined internal range liquidities to be lows, equal lows, fair value gap, other blocks within our dealing range. So we have a dealing range. We don't want to trade outside our dealing range. We want to figure out what's in our dealing range and use it to our own advantage. Like we said, we want to buy on discount level and want to sell at the premium level. So market dropped into the discount level. We want to find out where we can buy those pair. So if we drop to a lower time frame, still watch out within those. These are also liquidity. Market could have run into this. Market ran into this fair value gap is a liquidity. Just like we said, our internal range liquidities we can look at them as lows, equal highs. If it's in a premium, fair value gap, other blocks, those areas are all internal range liquidity. This is market running into this level, but because we are not trading with daily time frame, we have to go down to our entry time frame to also seek out those internal liquidity that we could find in those areas. Liquidity lies here, price, yeah, has a possibility of getting to this place before it can continue to go up. So let's use a 15-minute time frame because we want to make it as real as possible and it's not cherry picking. So if we drop to the 15-minute time frame on one hedge, as you can see on this chart, you will see that we have what we know most times we call equal lows. These are lows here. All these things are liquidity. There's another low here. All these things are liquidity. So if we look at them, these are the area we want to see price getting into before we can think of buying this. We don't want to buy at the premium zone, and all these areas are also liquidity. If price starts to go up, price might likely get to them and run them through. But because we're expecting to take a buy at this level, so we start to watch what market will do at this equal lows and these lows. Market might apparently run those lows. That's when we'll start looking at for a reason to buy this. Remember, we are not trading at the equilibrium prices. We want to buy at discounts in order to make profit. So we start watching those area, which is equal lows. Is there any fair value gap in this area? We map out all those liquidity levels. Price might run through this, price might run through this, price might get to this or this. So the question you ask yourself, maybe which one is the one to expect. We watch these levels on our lower time frame for an entry. Your lower time frame could also be 5 minutes time frame, depending on the kind of trader you are. So we are now waiting the difference. This is where the difference between those who rush into the market and those who wait. So we're waiting for price to dip below these equal lows in this discount, or maybe above high if our example is on the selling side. We want to see price dip here or rally up if it's for sell. After that move, then we wait for something. Yes, people can trade liquidity run. I know there are those who are aggressive, but if you're starting, though, I will ask you to wait for a confirmation. Some people can trade here, but if you're trading here, price might likely still get to this area or peradventure this area. So now what do we do after price run out this equal lows or maybe here? The next thing you have to do is to wait for price to display a displacement above this level. As price run out this level, we want to see price rallying up, giving us an obvious displacement away from this level that it has run out. We don't want to make this video so high, so we want to see price displays above this from the level it has run out. Immediately we saw that, we begin to watch for the next thing. Remember, running liquidity is just showing you what price is about to do. It does not mean you should jump into. So we want to see a strong displacement, impulsive move away from this area, or this area. If price peradventure get to this level, we want to see displacement, a strong move that is obvious in your own eyes that there has been a move on this level after price has run them out. This is shows an intent, not just noise. So we want to see those areas being taken out and a displacement above those areas. After the move away from the liquidity, so after the liquidity had been swept, that's when we start waiting for our entry. We wait for markets to retrace back after the displacement, markets to retrace back, maybe inside a fair value gap or other block or whatever, or just a pullback to give you an entry, because you don't want to buy at the height of the market. You wait for the market to pull back and give you an entry for you to run the market up. And then you target to exit or start taking partials at every liquidity run. At every liquidity run, you might leave a little to get maybe to the external. But as markets try to go up, you try to take out partials of your profit in those areas. This is how, just like we promised, to trade internal range liquidity. Remember this, don't make these mistakes. Entering before liquidity is taken. No, it's not acceptable. Maybe you will become the liquidity or ignoring the dealing range. You've already mapped out our dealing range, and that's the dealing range we are working with. Do not ignore it. Remember that these are the area that we are focusing at the moment to see how this dealing range, what price is going to do. Do not ignore the dealing range. That means it's like you are trading randomly. You don't have a direction. Do not trade on the equilibrium because you don't know whether price will continue to go up or to continue to go down, because it doesn't have a clear edge or bias for the market. Um, do not maybe trading every level equally. Not all liquidity matters. Just like we said, price might apparently get, yes, down to these equal lows and continue to go lower. So your duty is to watch out and see which liquidity that truly matters. The range, after the range, you get your bias, you allow liquidity to be sweep, you get confirmation, you get entry. Think of price like this. The internal range liquidity are like small magnets, while the external is a stronger pull. So all these external we've mapped out within our dealing range, because the ones we looked at here and here are external, are pulling price towards them, while those ones are the little ones that want to give you an entry advantage. If you start waiting for liquidity to be taken before entry, your entry trading will change. Remember, and your trading style will change. You stop chasing price, you stop gazing, and you start aligning with how price actually move. Remember, it's not price doesn't move randomly. Price is always seeking for something, and that is what we are helping you to understand and know and use it to your own advantage. So, what do you think about this? Do you wait for liquidity sweeps before entering, or do you enter early? Remember, it's structure over speculation. I will see you in my next video. Have a lovely time. Thank you.